Jamie Burke, founder and CEO of Outlier Ventures, the world's leading blockchain and Web3 accelerator by volume. Welcome to the Crypto Mile.
Hi Brian, thanks for having me on, looking forward to it.
So Jamie, we're all still reeling from the 2 weeks of chaos in the blockchain industry after what happened at FTX. How can the crypto space rehabilitate itself?
The reality is, I think there's still some fallout to come. We're already seeing speculation of a number of very large actors in the space, and should anything happen to them, then that poses a kind of systemic risk. That said, having been in the space for some time now, coming up to 9 years with Outlier Ventures, we've been in these cycles before. We're used to the volatility, and one thing's for sure, crypto generally is incredibly resilient. I think what happens next is interesting. So clearly there's a crisis of confidence in the asset. What actually happened with FTX isn't necessarily a technological failure. It was actually more the failure of centralized actors in the space, and of course over leverage. And some people have linked what's happening with FTX ultimately all the way back to Luna and Terra, right? And Three Arrows. So I kind of see this as one process, but what it does is it's highlighted the role of centralized actors in the space, the fact that they've been pushed to the margins of the financial industry offshore, rather than being properly regulated with oversight. And that just gives opportunity for bad actors. It creates more temptation for bad actors. And so I think it should be a point of reflection for regulators to think about the fact that crypto is not going to go away, and how should they better integrate it into the financial system as it goes prime time. We've already seen a number of exchanges at least begin the process of looking at proof of reserves. So should exchanges use more DeFi and blockchain based technologies? Guess what? You'd have more accountability, and we'd see less of this happen. So, I think it's a wake-up call to the industry, but I feel very positive that it's a reset that we're going to kind of rebuild back from.
Going forward, what does this look like? After the failure of FTX and BlockFi and all the connected entities, are central exchanges doomed? And does the industry need user-friendly, decentralized exchanges?
The reality is, if we want crypto to touch the existing financial system and fiat, there needs to be on and off ramps. There needs to be bridges between those, and they will have to be to a degree centralized entities that comply with local laws, regulations. I think it's better that those entities are allowed to be onshore in key markets like the US rather than on the fringes in offshore jurisdictions. I think should there be standards around how various exchanges or centralized actors in the space, how they manage their treasuries and these various things, should that be on a ledger somewhere that everybody could see and audit? I think that would be beneficial. What I've been saying is, look, I think we have to accept centralized exchanges, but not in their current form. We should really be pushing that they adopt the technology that they're giving people access to speculate on. Now, that said, whilst, of course, a number of bad actors have been able to obfuscate what they're doing, ultimately, you could see almost real time crypto Twitter, do forensic analysis of what was happening at FTX. You compare that to Enron and how long it took to unwind equivalent frauds, years, if we ever get the full picture at all. So even though the entities are still relatively centralized, still just by them being in some way engaging with blockchains, we can ultimately find relationships between wallets, we can track flow.
What we're looking for is we're kind of defining now which sectors are thriving. Is it DAO, DeFi, Metaverse, NFTs? where should investors focus?
I think where we are in a market cycle is probably a prolonged bear market. A lot of people are referencing crypto winter, is it, or is it not a crypto winter? I still hold the line that it's not yet a crypto winter as in a technological winter, referencing what happened over a couple of decades with AI, because what that requires is all capital to dry up totally. And that's just not the case in Web3. We still got billions of dollars in venture capital allocated to space, still to be deployed. We have new funds joining the space, although they're slowing down. So whilst the crypto market proper listed assets are down anything from 70 to 90%, in venture, we're seeing record levels of capital deployed. We still speak to several thousand startups a year. Each quarter, that number of startups growing. Actually, the kind of quality of founders improving. We're getting a lot of people leaving Web2 because, of course, big techs imploding, huge amounts of layoffs. People are reassessing their lives. And guess what? They want to build in the Web3 paradigm, not a Web2 paradigm. So we're seeing a huge amount of talent come into the space. So all really, really healthy signs generally in venture. And we expect that to then start coming into listed assets. And there'll be some technical trigger that will drive that whole narrative and a bull run again, just like NFTs did, just like DeFi Summer did, and just like the ICO boom did.
Jamie, we'll definitely encourage people to look at Outlier Ventures website, and it's been an absolute pleasure speaking to you today.
Thanks, Brian. Thanks for having me on.